Fund. There we go. Casper's over 12 years experience in development finance, covering all stages of the investment process. And he fulfills his role via the Impact Investment Fund. And he's developed his career throughout at the Dutch Development Bank, FMO, where he gained experience in different roles with that. So he has a vast experience of agribusiness portfolio in Latin America, Africa, and Asia. I'd also like to welcome Ed Hewitt, who's the Director for Natural Climate Solutions from Respira. He has over 10 years experience on environmental finance, and he founded the Africa Forest Carbon Catalyst with the leading environmental NGO, the Nature Conservancy. And previously he's been with BP Alternative Energy working on CCS and renewables. And he will explain a bit more about what Respira provides and how they work on the ground. And I'd also like to welcome Sanjiv Louis, who's an investment director at the Anne Green Fund. So he has over 22 years experience serving corporations and families in Asia, and he's now managing a portfolio of high impact funds, investment funds in agroforestry and natural capital sectors across Asia, Latin America, and Africa, delivering both environmental, social, and financial returns. So I'd like to invite each of these fund representatives to have about 5 minutes to introduce themselves. They'll be sharing who they are, what their funds are, and what their funds priorities are. And this will be focused on what activities do they fund in relation to FLR, where they fund, if there's a regional focus, and how much these funds are, the range of funds, and also share 2 key points of consideration when they are looking to invest in programs for FLR, and how that impacts those who are aiming to access them. So Casper, I'd like to invite you first to give a brief introduction of yourself and the Agri3 Fund. The floor is yours.
Thank you very much, Lucy. Really nice to be here, and thanks for the opportunity also to share a bit about the Agri3 Fund. So my name is Casper Havinga. I'm the investment director for the Agri3 Fund. The Agri3 Fund was initiated originally by Rabobank. You might know the big Dutch agri-bank, with the support of United Nations Environment Programme. And the idea behind it is that they saw a big opportunity for financial institutions to play a role in the financing of sustainable agriculture and forest restoration, but that these banks were not able to take up this role because of their risk limitations. That essentially they could not provide the right structures of financing or take the risk that was associated to these kind of projects. So for that reason, the Agri3 Fund has been created, originally supported with funding from the Dutch government, together with Rabobank providing a senior funding to the fund, and we're now also getting other investors on board. And the goal of the fund is to provide de-risking guarantees to financial institutions to enable them to provide financing to farmers or organizations in the supply chain that work with farmers to create impacts on 3 areas, essentially. So one is forest restoration and protection. The second one is the promotion of sustainable agriculture. And the third element is that every project should always have a positive rural livelihood element to it. So for example, examples of projects that we have done with Rabobank, which is one of our partner institutions we're working with, is providing a long-term finance in Brazil to finance the conversion of degraded pasture lands into productive integrated crop livestock areas, together with investments in restoration of legal forest reserve areas that farmers have to maintain there, and improving these reserves as well, and reforest them where necessary. And how we can support it as a fund is that, for example, in this case, a bank like Rabobank, they can only offer loans for up to 5 to 7 years because that's their limitation they have as a bank. And we can provide them with a guarantee to increase the tenor of their facility. So with support of Agri3, they can actually provide a 10-year loan to this farmer, which basically helps the farmer to have the space to invest in these transformations, which take time to generate also cash flow returns. But we can work with banks all over emerging markets. So we don't have one specific country focus. We can work in all developing countries. But our current focus is mostly on South America, Southeast Asia, mainly India, and East Africa, where we really intend to expand in the next years. Agri3 also has a technical assistance fund, associated to the investment fund that's managed by IDH, the Dutch Sustainable Trade Initiative. And with the TA fund, we can actually support the clients either in the pre-investment stage to bring their project to the stage where it can be financed by the bank, or post-investment to actually implement the impact objectives that they're trying to create there. The size of the investments that the guarantees that we can provide is between 2 to 15 million, but it's always combined with the financing that we catalyze from the financial institution. So in that sense, we aim to provide total loans of 5 to up to 40 or more million, depending on how much additional commercial financing we can catalyze. So what's important for our fund is I think two main things. So we're really looking for partner bank relationship. So when we start to work with a financial institution, we don't want to do a one-off deal with them. We always start with the first deal, but the aim is that we can replicate that we can really support this bank to take a next step in being able to provide this financing related to our impact objectives to their client base, that we use their relationships, their local presence, their clients, but that we aim to bring them further in providing them more capacity, both on the financing side through our de-risking guarantees, but also on the environmental, social, and impact side, because we review every project also specifically on those elements if they match our impact framework, whereby a very important element always is the additionality. So a project should go beyond business as usual in that sector, and of course there should also be financial additionality. So the financing that we support with our guarantee cannot be obtained without our support from a commercial financial institution. Yeah, I think that's just a short introduction. Of course, much more to tell, but let's leave it here for now.
Thank you very much, Casper. I'd like to then invite Ed Hewitt from Respira to share his what Respira does and his role directing nature and climate solutions. Ed, please, welcome.
Thanks, Lucy. Hi, everyone. So I'm Ed Hewitt. I'm Respira's Director of Nature-Based Solutions. So it's my job to find the best nature-based projects for Respira to invest in. So Respira is a carbon finance organization. So we invest in nature-based projects that produce verified carbon credits. So that's an important kind of distinction from some other funds. We only invest in projects that produce verified carbon credits. And in exchange for our investment, we, as Respira, we take delivery of carbon credits, and then we sell those carbon credits to end users, so corporations, who retire those to act as compensation, or some would call it offsetting, of their residual carbon emissions as they make their own transition to net zero. So Respira was founded about 3 years ago, and it's all backed by private money. It's a private sector investor. So our original capital came from a group called Capricorn Investments, and really the mission is to mobilize private sector capital into primarily nature-based projects, and carbon being the specific commodity that we invest in. So to date, we've made investments in 11 projects globally. That represents a commitment to around 23 million tons of carbon. So that gives you an indication of the size of these projects. And investments, the way that our model works is that it's over a long time horizon. So I mean, there can be up to 40 or 50 million dollars, but it's over a long time horizon. The way that the business model works and has operated to date is that we pay for verified carbon credits as they are issued. So we pay a floor price for those carbon credits, and we set that floor price. It often rises from now and into the future, and we take delivery of those carbon credits as they're delivered, and then we have a profit sharing mechanism with the projects, which means that they also benefit if carbon prices rise in the future. So what it gives those projects is a bankable, or what we call an offtake agreement. So it's essentially a guaranteed market for their projects at a floor price, which means that they cover their costs, and then they have profit participation above that. As we evolve the business and going forward, we'll also be making what are known as prepayments. So that's where we put money in upfront to a project to help it get off the ground. And then in exchange for that money upfront, we will then take delivery of carbon credits once they're issued in the future. Just to be clear, we as Respira, we were private sector investors, so we wouldn't take really early stage project risk. So we wouldn't invest in anything that was pre-feasibility stage. We need things to have had a full feasibility study done and a business plan already made before we could invest in it. And we need to know specifically how many tons it's going to produce, what standard it's going to be verified under, and we need to have at least some indication that the team have people on it who have done this type of project before. So hopefully that gives some indication as to what we do. We invest globally in all different nature-based activities. So we have mangrove restoration projects, soil carbon projects, forest conservation, forest restoration projects, essentially anything that is nature-based and produces carbon credits is of interest to us.
Perfect. Thank you very much, Ed. And I'd like to ask the same questions to Sanjiv Louis to share more about the And Green Fund, please, and your role in that and what you invest in relation to restoration. Please, the floor is yours.
Thanks, Lucy. Hi, everybody. So I'm Sanjiv Louis. I'm based here in Singapore for the last 22 years. The last 5 of which I've spent with SAIL. SAIL was set up about 5 years ago to focus purely on investment management, which would invest in real assets where we can generate both, commercial financial returns, but also with a very key focus on environmental and social returns. So And Green Fund is our main fund. It was also launched 5 years ago and quite similar to Agri 3 around that time. We also have a big partnership with UNEP. The initial founders, I guess, of the fund, the investors who really seeded this idea, the funding came from NICFI, which is the Norwegian government, and sort of was conceptualized by IDH out of Holland. We act like a private sector investor, as Ed talked about. We definitely like to be very commercial in terms of our lens around investment. But all of our capital right now is really from the donor universe. So we've got FMO who joined last year as an investor. They also have funded money to us through the UK government, through BASE, through something called Mobilizing Financial Force, which was announced last year at COP. We have Unilever, we have the Global Environment Facility. So you can see sort of very much donor-focused capital, which makes us really a blended finance vehicle at this stage. The focus for us now is to now leverage that pot of donor capital to bring in private sector money, and that's where we hope to scale the fund from its current base of about $200+ million to get to something closer to $1 billion, with most of that coming from the private sector. In terms of what we do, and Green has a very narrow focus, similar to Agri3, and relevant for today's discussion. We focus on sustainable agriculture and forestry. We look at tropical forest zones globally. So while I sit in Singapore and I look after Southeast Asia, my colleagues look after Central and West Africa, and we also have people in Brazil looking at Latin America. So we look at commodity production in these tropical forest zones. I think for obvious reasons, I think all of you on this call would understand the threats we face from poorly developed food production systems and inefficient land use, which is a big driver of climate change. And what we do, and I think the best way to explain, how we're tackling those challenges is to talk about a couple of our investments. We're an investor, so unlike Agri3, we have the capability to do some guarantees if needed, but in most cases we're investing directly in these commodity supply chains. So we go directly to producers, cooperatives or farmers if possible, large-scale growers, traders, processors, and we provide them patient capital. So our offer to them is long-term funding that's flexible, very commercial in terms of pricing, so we're not concessional in terms of the way we look at the risk or the credit, but we provide them other flexibility, which allows them to invest in transforming these production systems to much more sustainable and climate resilient models that also support things that Casper mentioned earlier, rural livelihoods, development, productivity in terms of yields, and therefore much better and more efficient land use, and therefore much greater reduction of deforestation and the threat to standing forest. So a couple of examples of how we do that, or how we've done that so far. We've invested in about 7 companies so far. We've already had 1 repayment. One of the projects in Brazil is in the beef sector, which might sound odd, but obviously beef is one of the most inefficient user of land. And in Brazil, you have very large scale farms where forest actually sits on farms in Brazil, unlike a place like Indonesia, where typically farms, you sort of exclude the forest and you plant as much as possible on your farm. In Brazil, you have legal forest reserves and areas of forest that can be legally deforested, and then areas that have to be protected. So in our investment with Marfrig, which is the 2nd largest beef producer, they don't actually own any of these lands, but they then source from cattle farmers, and they found that their direct suppliers alone have 1.1 million hectares of forest still standing on their farms. So that's a huge threat if 600,000 hectares of that is under direct threat of legal deforestation. So our investment with Marfrig allows them to make a big commitment to investigating how much of that is actually under threat currently, how can they influence that, and to make a commitment to keep that forest of 1.1 million hectares standing. And so they make that commitment public. It's in our contracts with them, and then they monitor and report on that to us actively. Similarly, in Indonesia, we've invested in the palm sector, again, a sector that's highly criticized for past deforestation and the ongoing risk to forest and biodiversity. We've invested with a company there that's a pretty medium scale company with over 100,000 hectares of producing areas. Again, it's investment in making their supply chain as transparent and as traceable as possible, really making their NDP as highly implemented and transparent as possible. So making sure that they can go identify exactly where all of their raw material supply, their FFB, comes from into their various mills. That may seem obvious, that maybe seems like it's already being done, but what we found is in the palm sector, a lot of that is just really at the policy level and very little implementation. So that's where Green gets involved, is to provide the capital to really both challenge and also empower these companies to make commitments over the long term to transition their businesses, and then hopefully replicate them throughout the sector through crowding in capital for other investors to come in, and for other peer companies to take on the same sorts of commitments. Maybe I'll stop there and let you get on to questions, Lucy.
Perfect. Thank you very much, Sanjiv and Casper and Ed. A really interesting introduction to all of the very different approaches for each of your funds, and would welcome any questions that people have that they start